what's good, everybody? Welcome to the closing beat. How you doing? Hope you had a great Thanksgiving. Boy, I leave the markets for just a couple days and you guys like wreck everything. Well, hey, I hope you had a great Thanksgiving. You had a good time. We took a little bit of a break. We're back at it. We're ready to go. We got lots of stats and good stuff for you. And, you know, we're going to pick up right where we left off. If you're following us here, this is just a quick market show where we cover the stock markets, the good, the bad, and the ugly, leave out opinions, try to give you the facts when possible. And so we'll try to cover everything today. If you have a question, feel free to leave a comment below. I can't address individual stocks or whether you should buy or sell them because we're registered financial advisors here at Jazz Wealth, and we hope you'll check us out if you need help with your retirement accounts or want someone to be your financial advisor, but the big companies don't want to call on you and you don't want to pay the big companies either. So check us out at jazzwealth.com. Okay, here's what we got going on today. Off to the left, there's the stock market, a positive day for a change. And my little mind was going crazy because I looked at all this. I said, well, we're up 1.5%, 1.5%, 2% in the Nasdaq. That's great. But last week, even though we were sort of away, every day was down. If you look at the Dow, every single day was lower. And that made my mind sort of wonder a little bit. I'm like, well, normally Thanksgiving week is positive. 68, almost 69% of the time, Thanksgiving week is a positive week. Now, it doesn't mean it gained a lot, just means it was positive by at least 0.01%. So if you go back and look through the data since 1968, that's what you end up finding out. So then I was like, well, if the market was lower every single day, the Dow last week, if you look at that, how many times has that happened? So you go back 50 years, 1968, and believe it or not, there are only 2 times that the market has sold off every day during the Thanksgiving week. And interestingly enough, 2011 was the last one. 2018 is the most recent one. So 2 times in a 50-year period that the market has sold off every single day on a holiday week, which of course is only Monday, Tuesday, Wednesday, Friday for a half a day. So I thought that was pretty interesting. Well, we'll cover the markets here as we go. I think if you're following the markets, we're sort of settling into a spot where there's a real chance for some support. I'm not going to call any market rally from here or Santa Claus rally, as people like to say it, but it sure feels like this is sort of a spot where people can really, you know, bite their teeth on a good support area, and I'll cover that as we go. I mentioned already the markets. You can look off to the left and see what happened today. And at the bottom is a 5-minute chart to show you kind of minute by minute what happened in the stock market today. So, hey, let's get into it anyways. We've got there's the S&P. You should be able to see it on the screen. Looks good, right where we left off. I love it. So S&P 500, very much sort of oversold given what happened last week and then the week before. So you've got the opportunity for people to say, well, here's a support area. And although we sort of have moved into a time correction, not a price correction for now, or sorry, a price recovery, it gives people a chance to say, okay, I understand I'm not walking into the next rocket ship rally, but if I'm going to pick a spot, you got a little support here. So oftentimes people will say the market is due to sort of correct here. And people will say, well, that means the markets must fall. That's not always true. A lot of times the market can just chop around and do nothing for a while, and that's called a time correction. You can actually look back. We talked about this all through April and May. Oh, you can see it on the charts here. All through April and May, we were talking about the concept of just letting time pass. The markets didn't really rally. They didn't really sell off. They basically held steady for about a whole month as time passed, and then we were able to get something new started. I kind of feel like that's what we're working into here, given all the stocks that are now oversold on a short-term basis. So, you know, we'll see. That's just, you know, just something you pick up looking at the charts there. The Nasdaq, you can see, very much oversold in the short term. This one's a little different because we found lower lows last week. And so investors are temporarily going to say, maybe there's somewhere better I can put some money in the short term there. So that's just the general markets. I don't mean to like start off with a lot of headache and geeky stuff there for you. Today in the markets, you've got retail. That was one of the more popular areas of the market because Adobe, they actually came out and said online shopping higher by 24% for Black Friday, while the in-store shopping was down by just about 2%. I think it was 1.7%. And so there, first of all, the positive behind that initially is people are still shopping. Don't know where you guys keep getting all this money from, but it means that you're out there shopping, spending money. Even if it's on a credit card, nobody cares, you're spending money. And so investors are able to take that news from Black Friday and not assume that all of a sudden retail is the best place to invest, but they're able to sort of push off any bad economic news for the short term. So when you see all this negative China news and all kinds of stuff going around the world, this is like a brief sort of break in the clouds that we've seen since, early October. And so retail stocks were mostly higher on the day today. Amazon, of course, is when you hear that online shopping did well or is doing well, of course you think Amazon. So that added about 5.25% today. Macy's added about 2%. You had Target, I believe, higher by almost 3%. So some of those names that are normally direct competitors online with Amazon, they're actually getting a little help there too. It's sort of rare to see that if you happen to pay attention to that stuff. Okay, another reason that the markets sort of feel like maybe this is a bottoming pattern or some little support area, oil, price of oil. You've got a gain of 2.33% today. I know that doesn't really do anything considering the record drop on Friday. That was about 7% that oil fell. So I know it doesn't feel like that, but we always talk about this here where you don't buy a downtrend if you're one of those counter trend players. You don't try to guess where a downtrend, look at Alibaba, look at Micron Technologies. You don't try to guess where that downtrend is going to end. But when it falls off the end of a waterfall, now there's a discount to be had. We can make the argument that, yeah, it's like the falling knife thing, but would you look at that discount? So more and more investors will make that decision. And it seems like they're starting to do that here in oil, because today was a really solid day, not only to recover a little bit, but there really was no selling pressure. You just didn't see it like you've seen on all these other attempts at an up day. Let me zoom in real quick. Look at, if you're familiar with candlesticks, look at all of this in here. All these little tails, those sticks that you see. If you've never heard of candlesticks before and you're one of our customers, got 3 classes on candlesticks. Just let me know you want them. I'll send them to you. But if you've never kind of seen that before, what you notice, these little sticks here, that basically is just showing you that there was buying pressure at some point, but the sellers pushed it back down. Day after day after day, buyers tried to guess the bottom of this oil decline here and were unsuccessful. Now, if we zoom out, now we've fallen off a waterfall. That is a rather rapid drop. And an interesting fact, oil has actually never gone from a 52-week high to a 52-week low in less than 30 days, and it just did it the other day. So the first time in history on that one. Of course, it's still making 52-week lows, so maybe setting new records. But that's what you get. So if you get a little support in oil, all of a sudden, if I can just slide over here real quick, all of a sudden you get some of these sectors that start to see a little support as well. The oil ETFs, although they're still at new lows, right? Everything is very much right off the bottom of the lows there. You got oil service stocks and the energy ETFs all trying to give a little support as well. They're all oversold in the short term. So, I said I was going to like start off slow and just kind of ease back into it, but I'm sorry, I'm going crazy. Okay, we talked about Amazon and the whole thing going on there, Black Friday, so I covered that. General Motors, you're going to see in the news, it actually closed above the 200-day moving average today for the first time since the summertime. You got to go all the way back to mid-June to have this thing back above the 200-day moving average. That'll get some attention. The pop today comes on them cutting costs. They're closing a plant in Canada. I believe they're closing one in Ohio and Michigan as well. 2,800 jobs out in Canada. And then they're going to, in Michigan and Ohio, they're getting rid of the Chevy Cruze, the Chevy Impala. They're not going to make the Chevy Impala anymore. So that kind of sucks. If you're a Cadillac, they're not making the CT6 or the XTS. Is that the other one? I don't know. I didn't write it down. If the XTS is a Cadillac, shows what I know. If that's an XTS model, they're cutting that as well. And then their electric car, Volt, which interestingly, I didn't think, does that help Tesla today to get a little spike? A little bit, yeah. All right, 6% on Tesla today, despite the news over there from the interview. But we can do that another day. So Apple, here we got some interesting stats here on this Apple, because this is another one that sort of intrigues me here in the short term. Apple actually finished higher by 1.33%. If you look after hours, it's actually given all of that back, thanks to some comments that came from Trump a minute ago. Here's the thing with Apple. It is down 20% from the highs. That's officially a bear market, right? So how often does that happen? That's the curiosity. Is this 20% a discount, or is this a major change in the company? Is this something that you want to fear? Now, the reason for the discount has a lot to do with tariffs on the iPhones. We're just going to talk about this for a second, so sorry if I'm going a little deep for you. But so is the reason that it's falling because you should be scared, or is this some discount that you should buy? So to find that out, you go back in time and you say, okay, let's look back over history and see how often it's been down 20%. But since this decline has a lot to do with the tariffs on the iPhones and the production of the iPhones, let's go all the way back to when the very first iPhone came out. Who cares what happened before that? That's not really relevant to the kind of data we're looking for. So if you go all the way back to the very first launch of the iPhone, Apple has only been down 20% 3 times. This is the 3rd time. So it lets you know that, maybe that's just something that's happening here because of the iPhones. Remember, Apple does a whole bunch of other stuff. So without making this a story on Apple, you look at that and you go, okay, even if iPhone sales are slowing, this has proven to have been an opportunity over the long term, going back to the very, very first iPhone, which if you remember the first iPhone, the thing was ridiculous. Anyways, another stat, if you take a look, we don't use it a lot here, it's a very popular moving average, the 50-day moving average. If you put it on a chart, if you ever see me show a chart and there's a blue line, that's the one that I use for my 50-day moving average. So if you are a technical trader, then you notice this today as well, or hopefully you notice this. Apple is the furthest away from its 50-day moving average that it's been since the financial crisis. So it took a financial crisis, disaster, Great Recession, whatever you want to call it, to pull Apple down that far from its 50-day moving average, just over 20% from the 50-day moving average, or 19% or whatever it was. And so that hasn't happened since 2008, further signifying that if you're one of those type that likes a discount, here's one of those rare opportunities where Apple has fallen at a pace that is odd, right? That just doesn't happen. It's 10 years. You had to wait 10 years for the last time Apple gave you this sort of a pullback there. So I just found that interesting. It was something that I spent a little time on, and you make of it what you will, right? Of course, that's not a suggestion to buy a falling stock or anything. It's just, hey, relative to where things have been, what should we do with Apple? Is it a discount, or is it a reason to be freaking out? And so now you at least have some data. Okay, PayPal higher by 4% today. Investors kind of shook off the news. It really wasn't new news, I guess, but Venmo had some fraud issues earlier in the year. They closed down some of the settings, cost them a ton of money, but we already know from their earnings that they've moved on from that. And that's just maybe one extra thing that's held Venmo back from being super profitable. And now that that's sort of getting behind us, maybe, who knows, maybe that'll help them make a profit there. I think if you do see a profit there, that'll really help support the stock because everybody's got their eyes on that. AT&T, did you watch the Phil Mickelson Tiger Woods golf match? So we were in North Carolina and we did one of those Airbnb things where we were in somebody's house and they had DirecTV, and I kind of thought, like, it's only 20 bucks. If I charged it, like, I could just leave them a $20 bill. Maybe they wouldn't mind. I didn't do it and we were busy anyways. So, but here's the deal. If you paid the $20 to watch it on AT&T's network or Dish, call them. Tell them you want your money back because they actually broadcast it for free for a lot of people. So depending on when you tuned in, you got it for free if you even checked to see if it was there. So if you paid for it, they're giving out refunds. Big mistake on their part. But it just really shows how secure is the internet as far as broadcasting TV. If the industry is moving towards broadcasting online, how secure? I mean, that's got to be a big cost to them to keep everything secure so that they can make sure those dollars are going to them and not just being ripped off by everybody that can get free TV. Okay, in the retail space, so we talked about that being a good day today. I'm going to go over just a couple names and I'll get out of your way. Oh, I'm going to talk about Bitcoin also. We're going to keep the stats going here with the Bitcoin. So American Eagle higher by 5.5% today. That one was also upgraded. So good for them. Foot Locker seems to always be near the top of the list. I found this one interesting because it's breaking out of a little range. It's not perfect. If you're a technical trader, you could debate me a little bit on this one. I would agree with people seeing something a little different here, but it is breaking out of at least the 3-month range here. And so for any sort of scanner that has alerts for stocks making new 2-month, 3-month, 5-month, 6-month highs, Foot Locker is going to come up on that, the shorter time frame things there. So that's probably why you see a little more action there. Tiffany's, your high-end retailer, that's almost 4% on the day. So looking good there, just really oversold in the short term. And then Under Armour, one of the more relatively strong stocks in the retail sector, higher by 3% today. That one's all relative strength. And we're going to do a class on that one in 3 weeks for our customers. Check the website, just updated the events the other night, so you can better understand how to buy falling stocks, understanding all of this relative strength, and sort of scanning and analyzing stocks for that stuff, because I know a lot of you are interested. Okay, here we go. We're going to do Bitcoin. I'm going to talk about it. I never talk about Bitcoin, or I don't enjoy talking about Bitcoin. I have my own feelings on that one. But for those of you that are invested in Bitcoin and are sheepishly hiding behind the computer desk but need help, my job is to help, right? I come here to help you. And so even if I agree or disagree, I'm still going to offer the help. Here's the deal. Bitcoin fell another 13% today. We talked about it on the breakdown day to explain why the breakdown was so big on that day. If you took that knowledge and you looked at different stocks, you also found the exact same thing happening on those stocks. So you know from a technical perspective why the Bitcoin broke down as much as it did. Now, that has led to an aggressive sell-off, and I thought, well, how bad is this performance in Bitcoin? It's only been around for about 9 years, almost 9 years, right? So I went back and I looked at all of this. Bitcoin is down 80% from its highs, 80, right? So you got from that high all the way back there at the top of the screen to the low that we can see on the bottom of the screen, down 80%. I thought, is that normal, right? I know Bitcoin's volatile, but is that normal over the life of it? And turns out it's not that normal. Now, I'm going to share some information with you. You make of it what you will. I just like geeking out on the stats. The largest decline in Bitcoin's history is 93.1%. The second largest decline was 83.9%, but prices were different. This was happening in 2011 in its early days there. So you got to look at what relative to the price, right? Percentage drop is whatever it is. Relative to price, is this move lower a true discount? So in order to break the record for the largest decline, meaning we would need to be selling off over 93%, we actually need Bitcoin to go back to about 1,300. So I'm going to go back to the charts real quick because this is misleading. You're going to see this a lot when people do these stats. 80% from this high, 20,000, down to 3620. However, to get past 93.1%, Bitcoin has to fall down to 1,300, which now, if you look at the chart, seems like it's just a matter of days, right? So that gives you an idea of how much worse potentially it could get. I mean, I know these are just stats or whatever, but that would be another 64% decline. I think, is that for this stat? Yeah. So to get to 1,300, it's going to be about 63, 64% to get down there. So then I say, well, hey, here's the thing. If you look at the stock market, I can tell all of my customers when the markets fall, here's the average length and decline, here's the worst, here's the best, here's what you can expect as far as percentage declines, and go back in history and say, look, we don't know what might happen this time, but at least you have the averages. Well, let's do the same for Bitcoin. So if you're a Bitcoin trader or an investor, this pullback has now lasted 245 days, meaning from high to the low, it's lasted 245 days, and that will go on record as the third longest pullback in terms of days, meaning before it was able to stop and then go make a new high. So you've got 245 days. Here's the problem though. This was a little effort. So if you want to know what is the most number of days that from high to low it sold off, it's actually 842. So we are nowhere near the extreme, which is fine. What's the average, Dustin? Well, the second was 437. So we are nowhere near the average number of days that this instrument could decline. Now, to be fair, really, really short history. It doesn't take a lot to go back and find that information and see how that all works. And of course, 9 years, you know, a lot of people won't choose a mutual fund that has less than 10 years worth of performance history, but oh no, we want to get right into Bitcoin. So at least now you know. I wanted to give you some stats on that, even if it bored the living daylights out of you. Well, hey, I'm glad you're joining us back here. I'm happy to be back. I might have went overboard a little bit today, but I was feeling it, man. I was feeling it. Good things happening in our new, we've got a new studio that we're building out. It's slow progress, but we're building a little town, man. Every show is going to have a different studio, and of course we'll be welcoming everybody that wants to come down and maybe share some information on how to help people get their dough straight, or just want to see how the hot dog is made. We will have that complete hopefully soon, and so we're working on that. I'm glad you missed us. I love it. Do you believe there'll be a turn of the month effect? I'm looking forward to buying the dip for the end of the month. That'd be a good one. I'm always looking for different things to sort of study and see what happens there. You're starting to hear Santa Claus rally murmurs. I think if this week could just stay positive by at least 1.5%, I think you would see people start to sort of misunderstand how that all works, but start to bring that into the conversation. But I like that idea, Tan. I like the thought behind it. Maybe that's something I could look into. Obviously not before the end of the month, but it's something I could check out. You felt bored, Jose? Oh man, that's cool. I appreciate you guys watching. Volume pretty, you know what was interesting, Eric? The volume lighter today, which you could kind of track by this chart over here. It was just under average for the S&P 500 futures. But on Friday, when we sold off, volume was also lighter there, which anytime you do have a sell-off on the Friday, the Black Friday, usually the volume is heavier. So that I was even talked about in the media today. So that's not like a stat that somehow I magically know. So kind of interesting how you've got lighter selling pressure, lighter buying pressure. I think it's going to stay that way until we get closer to the G20 meeting in Argentina. That starts on Thursday, but Trump has a real opportunity. I'm not going to get into politics here, but he has a real opportunity here. So we'll really know what he believes about the stock market by the end of this week, I think. And of course, the media is just going to focus on that. Tech sector cooling off. What sector do you think could be the next one to rally in an economy like this? Well, look, Nick, so I can't make specific suggestions, but I can agree with comments that Morgan Stanley made. So did I write it down? I think it's in the scroller down there at the bottom. Morgan Stanley, one of the analysts that I actually really respect, he's really good. So he actually says that the U.S. stock market's going to be pretty soft next year and the year after. His prediction is right around a 3% gain for next year. So it doesn't mean we sell off or we crash or whatever. He just thinks right around a 3% gain. So his idea is REITs, consumer staples, and to move away from industrials, move away from small caps and go into large caps. So I sort of agree with that if you're midterm, like if you're getting close to needing whatever you're investing for, or if you just enjoy trading and investing, I would agree with that. However, I can't specifically say this is what I would do. So all I can say is I agree with that one. You got some opinions there on Apple. Yeah, I mean, there's a lot going on, especially with the Supreme Court ruling. I mean, you may be able to sue Apple here soon. We'll see what they decide. All the justices are going to vote on, or will be there for this one. So we'll see with the whole App Store thing. I'm sure we'll talk about it closer to as we hear sort of things come out, if that comes out. I don't think it'll be this week, but we'll see what happens. Nice. Well, that's all I have. Yeah, sorry I went a little longer today, but hopefully you enjoyed, found something useful out of it. If you do find some kind of interest, maybe you'll hit the subscribe button. If you have anything, questions or anything that I can help you with, leave a comment. We'll see what we can do. Otherwise, check us out at Jazz Wealth. I appreciate all of you that have given us a chance this year. Next week, we're going to start a giveaway, by the way. I shouldn't have said it till next week, but we're going to start a little giveaway. We're going to give away 5 different things. Keep in mind, we're advisors. We're not legally allowed to give away anything more than $100, so we'll try to get to the rule, but we can't break the rule. But we'll do that next week, and we'll cover that hopefully starting with the new Dojo wall. So enjoy the rest of your day. We'll see what happens tomorrow in the markets, and we'll be here to cover it. We'll talk to you then.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.